Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical side of this market, then we will move to the order flow by checking the commitment of traders, so what institutions are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting here from the monthly time frame, what we can see is that from a monthly perspective, this is exactly the level from which the market started all this move to the upside before then melting lower. What we know is that in the market, a previous low, so a previous area of support, once it gets broken to the downside, becomes resistance. So what we know here is that this red candle here, which is exactly the level that the market is currently trading inside of, is previous monthly support, which is now term resistance. And since it is previous monthly support and resistance, there is good probability here for a potential rejection to the downside, or at least the market should try to create a move lower. Then we can break it higher, but at least we should see a reaction to this zone. We can also notice how we do have an impulse and a correction, and in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And what we can see is that this area that we have just identified is also exactly in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse, which is a quite strong area of resistance that, once again, we could expect this market to reject to the downside. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice that all this zone is currently previous weekly support, which was acting as support here. The market then broke it to the downside. The market went for a retest. At that point, it became resistance because, as we said previously, previous support becomes resistance. And once again, this is again resistance here. Now, it seems like the weekly time frame is managing to break above that zone, but we don't have any confirmation for that yet. The market could still easily print a rejection lower to kind of reject the monthly resistance that we have previously identified, and this move to the upside on the weekly just be a fake breakout, considering that currently we have a very low volume, being still the New Year's. Now, dropping down on the daily time frame, what do we have? Now, from a daily perspective, the pattern that the market is currently printing is actually quite clear. We started with a very strong impulse, right? So the market had very strong bullish momentum. And then we started entering inside of this deceleration pattern. The deceleration pattern that I'm speaking about is in ascending wedge. Now, usually when the market creates an ascending wedge, so essentially a triangle, which is pointing to the top, in which the top of the triangle essentially is shrinking more and more, this shows that buyers are failing to provide and create some proper strong highs, meaning that they're losing their strength, and at some point the market will break lower. This is what usually this pattern indicates. Now, I did speak about gold a couple of times in the past. I spoke about it when we were around this area. I made a full breakdown explaining all the reasons for which we wanted to see this move to the downside and then the continuation higher, and that is exactly what the market did. Here, I made another breakdown explaining all the reasons for which we wanted to see this correction to the downside and completion of the W formation at the neckline. Again, that is exactly what the market did. And then I just was waiting and waiting and waiting for the market to break daily structure to the downside, which never happened. The market didn't create a higher high from a daily closing perspective and didn't provide a lower low from a daily closing perspective. And by the way, I will link in description all these previous analysis, so you can go and check it out for more free education. Now, I was waiting for a daily break of structure to the downside. That is still not happened. We still haven't seen the market break daily structure to the downside. And the reason for which I wanted to make an update is because now we have new structure. The new structure that I'm speaking about is exactly this low, because the market, when it created this red candle, showed that here it printed a low before then creating a rejection to the upside, meaning that now this is previous daily support, which if and only if the market will manage to break it to the downside, would become resistance, and at that point we could expect more bearish price action. Now keep in mind that until the market will remain above this area, it can easily continue higher. However, if we had a break below the support, after the break, this previous daily support would become resistance. So on the retest of this previous support and resistance, we would have good probabilities for a potential rejection to the downside, because at that point, monthly, weekly, and daily would all be indicating for a potential move lower. Now, what we still need to check is the COT data. Now, if we check the COT data here, especially for gold, what we can see is that with the last reports, we have continued to see increases in net positions. So institutions are not shorting yet, which is the reason for which, even though we have an ascending trend line, we're not managing to melt lower, because institutions also with the last report closed 4.6k shorts and opened 3.3k longs, increasing once again net positions from 128k to 136k. So at the moment is definitely too premature to be looking for any kind of shorts. That is why we also wanted to wait for the break of structure. With the last report, we reached now 92k shorts and 229k longs from an institutional perspective, with 4.6k shorts closed and 3.3k longs getting open. So gold is still strong from an institutional perspective. It can easily continue higher. However, if we finally manage to break below the support after a break on the retest, we should definitely start seeing some shorts getting added from an institutional perspective and longs getting closed. Because keep in mind that we did see a massive move to the upside and institutions were adding longs. So there is a good probability for some profit taking on those longs, a correction, and then seeing the continuation higher. That is a pattern that often gets created. So if we do get the break on the retest, how we could be approaching this move to the downside. Now, first, we should see some institutional shorting. Then, when we get to the retest, what we could be doing is, as usual, being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for the potential move lower and completion of this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a huge special promotion in which you have a big discount from 497 euros all the way down to 97 euros for the lifetime access price to the mentorship program. And as an option, since I have partnered with the forex broker Blueberry Markets, if you decide to open an account with them from your student dashboard, you can then get a full refund credited back into your trading account. And if you scroll lower here, you can see that there is still time to join before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway. So I really suggest that you join directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.